I have to be honest with you. I cannot wait for the day that I become bullish again. And whilst it's great news that Bitcoin is back at 60 grand, unfortunately, today is not the day. Even though the week we just had gave us a pretty nice uptrend for the week, I still think we have some things that we need to be careful of. And what worries me is how fast everyone turned bullish again and completely forgot that next week we have one of the most important news events of the year. As we know, we have FOMC next week. A lot of people are predicting what they believe has to happen as a result of that. My warning for this week would be to expect the unexpected. When things become too obvious and too many people think that something must happen, usually the opposite does happen. But if you know me and you know this channel, you know that I focus only on price action and I use news events to help me pinpoint where I may get pivots only. So in this video, I'm going to talk to you about why the price action, even though it looks like we had a good week last week, could still be bearish. Now, if you want to be super bullish, remain super bullish. But at the very least, just watch this video so that you know what to look out for in the event that things do turn around and you can protect your portfolios in time. I am Annie and this is Trade Travel Chill. If you are new here, welcome. If you're returning, welcome back. Be sure to smash that like button nice and early. Hit subscribe if you're not already subscribed. And let's take a look at Bitcoin on the daily time frame. Now, when we look at Bitcoin on the daily time frame, it does look positive right now. I will give you that much. You know, we have this W formation that has formed, and we have the expanding wedge, which is actually a bullish formation. And, you know, if this were to hold, this higher low right here would be the beginning of the breakout of that wedge eventually. Prices also come into this liquidity zone, which lined up with the 50 and the 200 EMA. That is also another positive. And prices cross back above the 10 and 20 EMA, right? So when we look at those points look positive, and you might be thinking, Annie, what the hell? What do you mean you're potentially still bearish? Well, let me point out the bearish parts of this. Number one, a W formation on the right side needs to break the 50 EMA with volume. And when you use the same candlestick indicator that I do, which is the PVSRA, when enough volume comes in, the candle color will change. So they will remain white and gray unless we have high spikes in volume. And as you can see here, the candle that crossed the EMAs, it's still white. So we don't have the volume on the daily time frame. We may have it on lower time frames, but even the lower time frames are a caution for me right now, which I will get to in a moment. The second thing that is still currently bearish about this is that the right side of a W formation needs to break the middle peak, and the middle peak is up here at about $65,000. So we're still $5,000 away from that happening, and it hasn't happened yet. So that's point number two. Now, after that happens, that's when you await a retest, and it's only on the retest that you then actually turn bullish and start to prepare for a breakout. So really, there's a lot of time that is still required for any of this to happen. And that puts us at risk of the current price action still forming a lower high, and therefore it would still be currently bearish. Now, if we take all of that away and we draw a simple retail pattern and join our lower highs and higher lows, there could be an argument to say, well, this is forming a triangle, and the triangle might break out to the upside. Yep, but being a triangle like this, it also might break to the downside. So that's not a guarantee just because we have that retail pattern in the process of forming right now. So I'm not really paying too much attention to that myself. And the final argument for the bears is that the halfway mark of this entire range sits at around $61,000. So unless we got above that at a minimum, you would be cautious cautiously bullish right now, but you would absolutely still be keeping your eyes open for a change in the trend that we had last week. And if you were to get it, you would be looking to open short positions, expecting that this liquidity is still potentially going to get filled next. So my orders at 47K Bitcoin, they're still in my spot orders. I don't have a reason to remove them at this point, but I did also open a leverage long position right here, and I'll stay in that position until I see some form of weakness that shows me we're not going to get a higher high out of this. Now, what does that mean for the long term? nothing really. Like, I think if we were to create a lower high, and I do think potentially we will go higher than what the price is currently and then potentially get our lower high, and I'll explain why on the 4-hour time frame. So I do think there is a little bit more room left in this move to the upside, potentially when the week opens. And if that actually does happen and it still creates a lower high, it's still actually bearish. So with that in mind, if we do get a rejection and then we start coming down into this lower levels of liquidity, at this point in time, I do think that would be it. So I am kind of looking at this lower one down here. I know that we've got the yearly open at around 42.5. I won't worry about that until I see what happens in one of these two zones. But what I'm really looking for to tell me that this accumulation range is over and we are moving out and the bull market's back on and everything's good and everyone get excited and yay, hurrah. I just don't think that when a low is in, they're going to give us time to get into it. That's what I'm looking for in this accumulation range. When we had this spike down here, I'm sort of looking for something similar, but a faster move out, because it has to cause panic and FOMO and it has to cause disbelief. That's how the market shifts and that's how we get kind of an impulsive move, right? Whereas nothing in here was impulsive. It's just a trend. We're looking for a big impulsive move like this, something like this as well, that just leaves you behind here even, right? That's when I'm going to be confident that the bull market is back on and go for your life and sell your house. No, don't sell your house, but you know what I mean. And I'm not seeing that yet. Now let's talk about the 4-hour time frame. So during the week, my target was around here at this vector candle here on the 4-hour time frame between about 57.5 to 59.5. We smashed through that, so that one's gone. And now that takes us to the next one, which is this vector candle right here, because after this downtrend here, this was the last attempt to hold the 200 EMA and push price up, and we fell through it, quite dramatically. So that's what makes this the area of interest to me, and that sits between about 61 to 62K, let's say. And when I have a look at this current price action here on the 4-hour time frame that happened last week, I can see one kind of impulsive move here and another one here with these two large green vector candles. So I'm kind of hoping that we get one more into this range. And if we cannot break above that range, that would be a good area to look for shorts, to expect that this little move to the upside is over, because this is too steep of a trend as well. This is not a nice trend that's creating higher highs and higher lows, and it's not a real trend. It's kind of a bit of a corrective type of move. And so if we get that one more push up and we see any form of weakness in there, it's going to be the highest point for you to get a short position. Right now it's rejecting under 50% of the vector. This is 50% of the daily time frame vector candle, but it's also above the 10 EMA currently. Even if it just stayed above the 20, it would be okay. Whether or not we get a pullback into the EMAs before we get this last push up, or we just continue to consolidate and then push up, I'm not sure. But I also don't think that's the tradable move either. I would not be opening a long position from here just to get up to 61, 62K. That's more of a target for people who opened longs during the week, last week, and are still in them. If I wasn't in a long position and I'm looking for a new trade, I would more be looking for rejections around here, if we're lucky enough to get into them, to open a short position. And the only way I would remain bullish once we get into this area of interest, if we get in there, I hope we do, is if we broke above it and retested it. We essentially need to get back above this here. Like, in order to be bullish, we need a higher high. So we need to get back above here, which, like I said before, is about 65K. Now, when I have a look at the 1 hour time frame, it's a little bit tricky right now. The high of the week currently is at 59,790, but this will reset come Sunday 5 p.m. New York time, and this level here will become the new high of the week, and that's at about 60,600. So it does look like there is a potential M formation forming right under what is going to be the new high of the week, but it's not a typical M. It's not it doesn't follow all of the rules that we like to see in an M formation. Now, that could be because it's a weekend, so the rules aren't going to play out as they usually do, but we don't have a stopping volume candle on the left side, which is usually like the final damage move that traps the most latest long traders. So we don't have that. That's why I say it's not perfect. We don't have the market maker showing up 3 times here on the inside right side, which that could still be in the process of happening. But at this point in time, it's not really happening. So I'm not too confident to say this is going to be an M formation here. This is the highest point and we're going down from here. This looks a little bit more like consolidation. And when I mark out this area as well to the candle closes, that helps you to easily identify where the stop hunts are happening. And look, we've got wicks here and we've got a large wick here. So these wicks out of this consolidation zone tell you who's being trapped or who's being liquidated. So people who may have longed in this consolidation during the weekend with their stop loss just underneath here, stop loss would have gotten taken out on that week, but that also would have triggered pending sell stops. So people who were bearish, but they were only bearish if we broke below this consolidation. So right now, shorts would be trapped because of that candle right there. But that's not to say we won't see a repeat of this candle up here given a few more hours time. So I'm still a little bit uncertain about this exact consolidation zone, but I don't have a reason to exit my long position just yet, simply because of this candle here showing me who got trapped. And all I'm really waiting for is to see if I do get that third impulsive move to the upside and potentially get to my 61, 62K target. If we fail that, if this does turn out to create the right side of an M formation, it's very simple. The 50 EMA is right here, which is also at the support line of this consolidation. So that is the world's most basic trade. You would see a rejection here in a lower high. It would come down, break the 50 EMA. You get a retest. Your retest is the entry to go short. And then we would be holding that for, as long as it trends to the downside. That would be the only time that I would flip my decision and say, okay, take profit on my long and flip short. Now let's talk about the Bitcoin dominance, because I did this post on X the other day. I hate calling it X, by the way. I did this post here last week saying this is not Bitcoin dominance coming down. This is Bitcoin dominance consolidating above the daily 50 EMA. And I was talking about this right here. So this is where a lot of people started to say that it's going to be alt season soon. Bitcoin dominance is dropping. It was equal lows and equal highs, and the 50 EMA is this blue one right here. So when we have a look at the dominance right now, have a look at that. We are about to break out again to the upside. So just be careful with that, guys, because if Bitcoin price moves to the upside and the dominance moves to the upside, your altcoins are not ready yet. They will probably still drop, or in best case, they will just stay sideways. So we're not there yet, but believe me, I'm just as ready for alt season as anyone else, but it has to be at the right time. And so I am going to start talking about altcoins on this channel soon. I might do one video a week covering some altcoin price action, and I'll just keep it separate to my Bitcoin videos because I know most of you guys like the deeper details on the price action in Bitcoin. I don't want to squash too much into one video, and I also don't like doing long videos. So let's have a look at what is going on in the orders on trading line above price. Look, first of all, I'm just going to say nothing. Number one, so let's not get too excited about any number I'm about to read out, but above price, the best we've got is 61K shorts. That lines up with my idea that we may get one more move, and that one move, it's either going to be false move week beginning, or it's going to be a one-day trend to the upside, or it will be the 3-day swing that just takes forever to get there. I can't tell you which one it's going to be, but this sort of does line up with that 61K kind of region. Although the orders aren't super high, this number is not telling me massive rejection at 61. It's just telling me probably resistance for a little while, and then you have to judge a price action for what it is. Below price, we have about 59K and 58,650. So if this consolidation breaks to the downside and we get a higher low, look in that range for the higher low, because that might be a better entry to get a long position if you are looking for one, and then have your target at 61. Like I said, I would not take a long out of this consolidation. I would only take it at the best price possible if I wasn't already in a long position, and that would mean price would have to retrace, show me some bullish candlestick structure here, give me a higher low, and then I would take a trade up to the region that I talked about. We have got a maximum delta of 15 billion to the longs. Now, when we're looking at the maximum, I'm usually looking around 20 billion if it lines up with my levels. So considering this is at 15 now, one more push to the upside will probably pull that up to the 20 billion, and then maybe we will get a rejection there. We do have this liquidity up here if they want to push it up. The largest one is at 60,450, and then the next one is at 61,640. So again, all of these things are lining up to me to expect one more push to around 61, 62. And I'm not saying we're going to automatically reject that. I would just say look for rejections there. If you get it, open a short. If you don't, stay long. However, if we are lucky enough to get it, look at all this juiciness that will come for next. So there is a lot of liquidity below price. You know, anything down to around 56K, there's a ton to wipe out on the way down there, but we could even come down to the 55, 54, and then we have to reassess there. But, and then, if this was a big liquidation event, considering we have such a huge delta, we could create a new low. So I just don't want you to rule that out yet, especially if you're aping into altcoins. If we do come for this and as a result, we create more liquidity lower than price and we end up actually breaking lower than 49K, you're really going to regret the altcoin choices that you have made in the last week. Finally, I just want to take a quick look at the CVD. So we have confluence, which is good. We've got price moving to the upside here. All of these CVDs are moving to the upside. So this is spot and also stablecoin margin contracts. So that's the futures contracts here. This is spot contracts here, and this is just the general CVD, and we have open interest. So when you have open interest moving to the upside, and you have CVD moving to the upside, and you have price moving to the upside, you have confluence in that trend being to the upside. So I cannot convince myself that we're not going to have that final push. And like I said earlier, the only thing that would change my mind on thinking that is going to happen is a break below the 50 EMA and a retest that fails to get back above it. Now guys, just quickly, you have only a few more days left to get into our Discord and get access to the trade alerts that my team puts out for you guys, giving you the exact entries, the stop loss, the take profit, giving you everything that you need for this trade. And you can get this for free, but it's only for the next 5 days. And the reason for that is because we are currently doing a Blowfin trading competition. So we have opened those trade alerts up to our free members as well as our paid members. Usually it is only available to our paid members. So if you just want a hint of what our trade alerts are like, then all you need to do is look in the description of this video. You will find a link to join Blowfin, and you will also find the instructions on how to join our Discord.